What is up, everybody? Today we're going to be taking care of our pre-weekly analysis for the week of February the 6th. So let's get into it. So I directed you guys' attention to last week the AMD that was happening on dollar. So that's going to be framing my week. For me, I'm really looking at, sorry, wrong time frame. I'm looking at this inefficiency up here. You have an old breaker block, a bounds price range, a newly created fair value gap, and you have a bunch of pools of liquidity. I'm going to drag this over because we don't need this or this right now. So for me, everything until this point, this fair value gap here, is just internal liquidity. I don't see anything that will prevent us from getting up here this week. Ideally, I'd like a small range Monday. You have an old gap here. Old volume imbalance. I'd like a small range Monday that will set up this as a fair value gap that we compare with this breaker block right here, these 3 consecutive up close candles. I'd be looking inside of this up close candle in particular for price to trade back down into and then trading higher. Small range day, we can even come into these equal highs right here. Down, back up. One second, let me just put this on my chart. There you go. So that's what I'll be looking at for DXY. Small range will create this as a fair value gap, trade back into it, pair that with the breaker block, and then trade higher. Moving on. Yes. So ES traded above just this high. And rejected. For me, I'm not really convinced that, we're bearish yet. I want to see this liquidity pool get taken out here, because for me, there's no real liquidity in this, because this took all of this existing liquidity. So liquidity needs to be rebuilt, which this rejection does. So you pair this liquidity and this liquidity, now we have a likely draw. So I'll be looking for discount arrays to pair with premium arrays, and then maybe new sells. So let's see what that looks like. And put this on this chart as well. This is also an old volume imbalance. And if I'm looking for a sell model to start, this is where I like to see. I like to see liquidity pools being formed just under premium arrays. That can cause a shift in market structure. If we get that small range, we could possibly form a swing low here to pair with this buy side. That'll then pair with this sell side to create the shift in market structure, but not worried about that at the moment. Yeah, for me, it's just discount to go higher at the moment. This is a propulsion block. You have an order block here, and then this is connected to that. So if we trade back down into this wick, this should be a sensitive area for price. So in terms of seeking discount arrays, you have Friday's sell side liquidity pool, a daily inefficiency, as well as propulsion block here. Nasdaq. Gonna leave that there. Same thing. I'm going to be looking into this order block here / inefficiency. NAS is stronger, so if ES makes its way all the way down into that propulsion block, it's likely to see that we're going to see NAS get stalled up in either inside of this volume imbalance here. It's not really a volume imbalance because this candle hasn't traded down into this yet. So this definitely needs to be sought out, but it's either if NAS stays the strongest, we're not going to see it trade down into this order block. It's going to stay above that and then rip higher. I'm likely not going to do analysis on Dow again because it hasn't moved, but we will look at it when I get over there. So that would be second objective, depending on when we put the low of the weekend. If we can get a Tuesday low of the week, I'd suspect that the second one gets taken out. And this is like when markets are like this is, relatively simple, price action to read on. We didn't take buy side here, no shift in structure. So continue to look for discount arrays to pair with premium arrays here being liquidity, discount arrays being daily volume balance, daily fair value gap, daily order block. Simple, simple, simple. let's see what YM looks like. Shit, it doesn't look good at all, which makes sense because it has covered all the ground that ES and Q are looking to. Yeah, for me, there's no real draw to Dow. I'd pair these highs with all, like, we're building up so much liquidity sell side. You have this swing low, this swing low, this swing low. We're building up so much liquidity right here. And I'd like to pair this with this liquidity and then this inefficiency down here. But I'm really not going to make any projections here because it looks like shit. And that's a skill in of itself. Especially for me, I like to follow daily order flow wherever I see the daily order flow is the cleanest, making it easiest to participate. That's where I'm going to gravitate towards. All right, let's hop over to gold. Gold playing out to the T. This is unmitigated, so we'll leave this here. Higher time frame real quick. I'd be suspecting that we're going to start accumulating price, in this range. This is a pretty thickly traded area, even though we have these equal lows right here. This right here is very thickly traded before it ripped. So when price gets here, it's going to take liquidity, and then I'm assuming it's going to do something similar to this, as in sit right here before it's either going to move lower into these imbalances in this liquidity pool or continue higher. As far as a weekly bias goes, let's go to the 12-hour. I'm going to see if this old volume balance can be used as resistance to take us down into this liquidity. Delete this, drag this over. All right, let's hop on over into currencies. So we are looking for bullish dollar, so bearish currencies. I am going to leave this daily for value gap here because we recreated a fair value gap here, so we could see inversion at this area. This long candle is also a breaker block because we did take out this high here. Yes. Australian dollar is positively correlated with gold. So, we have seen some displacement I switched the wrong one, to the downside on gold as we just went over. So it's good to see that AU replicated, as well as the dollar strength. So I'd be looking inside of this wick right here. I'm actually going to drop down to a lower time frame to see if there's something in there for us. Nothing really, but that's where I'll be looking, inside of this wick here. For shorts, and then, first order of business would be this pool. You have equal lows, a swing low here, and then and then you have weekly inefficiency there. So I'd probably just stop right there. Yeah, we're gonna delete some stuff real quick. I'm gonna delete this. This. Yeah, there's an existing for inefficiency on this time frame, so I don't need to go below, because I can see that there's efficiency and an order block paired with it already. I would extend one more level out in time, and that's just going to be the midpoint of this order block. So yeah, high of the week for me, interest area would be that wick of the breaker block, or inverting this old BPR here, here. Moving on, EU, reacting to our level, building up inefficiency. Multiple inefficiencies here, buy side liquidity pool, getting a reaction is suspected. We're going to annotate this weekly order block. I'd be watching this level on a close basis. Come Friday, if we're still, repricing lower, I'd look for, if we're expecting open, high, low close of the week, I look for the low to be set somewhere in this range and then come back above, depending what dollar is doing. And that's paired with a daily inefficiency, so that's an easy draw for the week. Should be a relatively small range as well. 150 pips to the bottom of the fair value gap on this time frame. Very doable. I'd be looking at these series of candles paired with this order block again. I'm looking for a small range on Wednesday because that's going to define, really set up Tuesday and Wednesday as potential highs of the week, paired with this inefficiency and these either order blocks or breaker blocks in, all of these risk correlated assets. How do we do that? Because it's gonna be something like this. Like we're really gonna push through it, in my opinion, and then we'll come back. So that's what I mean by respecting the rush from here. But yes, I do my analysis pre-week every single week. Last week was an exception because of the calendar, the news calendar. I was not looking to come in here and predict the market because I don't know. I had no reservations in that many news events. So rather than get myself attached to some sort of bias, I'll just let it do its thing. And came back here the following week. GU, the weakest of the three under heavy distribution. Look at this. So like I said, I don't believe, like I come from the belief that stop runs hold the least amount of liquidity. So I'm looking for failure swings. That's why I dropped all the way down to the 4 hour for this level rather than using this wick. Moving back into our daily. So these are the downside objectives I'm looking at. Again, small range. Monday sets this fair value gap for us. I'll be looking at this old order block. Now mitigation block. So this is going to be our opportunity range here. I'm not looking for equal highs because I'm bullish on dollar. So if this is a risk correlated asset, means it's inversely correlated to DXY, and I'm bullish on DXY. Why would I be looking for highs? Yeah, and all of these highs made SMT with the other majors, so EU and GU, as we just went over. I keep doing this. I mean to go like this. So you see how we made higher highs in EU and AU, but GU failed. So this is your SMT. So that's how I know this one's under heavy distribution, not only because of the size of the candles. Notice how EU and AU only had 1 day of heavy distribution, where we had 2 on GU, but also these highs, we don't recreate highs on GU, and AU and EU both did. So there's your SMT with either the correlated assets as an AU or EU, or correlated, inversely correlated SMT with DXY. So I would be suspect at this range right here. Extend this out in time. And that's assuming if we can even get up there, we could institutional order flow entry drill and just roll over, create fair value gap on a Monday range, trade back up right into the fair value gap. We might not be getting all the way up here. What's the range on this? Yeah, I don't think we'd be getting that high. So fair value gap and then lower. UCAD. I was looking a little lower at this set of these lows because we had a failure swing after the stop run. We did not get it. It just took the existing failure swings after that in the form of this right here. Same thing from our previous lesson, accumulation, manipulation, distribution. On UCAD, super tight range, deviate from the range, and now the true move is coming up. Let's see. This fair value gap should be used to support here. If we get a fair value gap that gets disrespected as resistance, because this is a sell side imbalance, buy side inefficiency, we expect it to be inverted and use as support after we break through it and close above it, which we do here. So let's expect this to be our opportunity range to go higher, and then these equal highs, first order of business here. And then I'd be looking at this BPR high and this inefficiency high. Here and here. So that's going to wrap it up for this week. I hope everyone has a good week.